Hi, Assalamualaikum. My name is Muhammad Hazim. In this video, we present company analysis. The company that we choose is Jehshare System Berhad. The company analysis consists by 5 parts: economy analysis, industry analysis, company analysis, financial analysis, and technical analysis. Let's go.
First, I will explain on the parts of the economic and industry analysis. We have made up perusals based on the economic top-down approach, starting from the world, followed with the regional and then domestic economy. The economy of United States in 2018 remained strong regardless of the current trade war with China and the financial market instability. The GDP dropped in 2019 compared to 2018. It was due to the fall of the public spending and the investment business. Inflation rate in 2018 peaked, increased from previous year. However, in 2019, the US Federal Reserve cut the interest rate to combat multiple economic issues such as risk of stagflation, global oil disruption, trade war, slowing job opportunity, and many more. China maintained the mild consumer inflation throughout 2019. From early year of 2018, China increased their short-term interest rate after following closely behind US Federal Reserve Bank's actions by increasing interest rate to 25 BPS, this causing China putting themselves in financial risk by keeping up with global market trends. For the capital expenditure of Japan, it was slowing down in productions of all-purpose machinery equipment and automobiles. Energy and oil prices mostly contribute to sudden inflation gains. The economic expenditure overstretched job market, especially with mismatched supply and demand and working age populations. Bank of Japan mostly stressed over the task of creating inflation with the current US-China trade war. Bank of Japan will require financial institutions to pay interest if the reserve amount was excessive. Moving on to the regional countries of Thailand, Indonesia, Cambodia, Philippines, and Singapore. As can be seen from the slide, the GDP of Thailand, Indonesia, Cambodia, Philippines, and Singapore were all facing decline in their GDP rate since 2017 until 2019. At first, Thailand was gaining better figure in its GDP because of the recent tourism sector gaining constant growth and attentions, yet the GDP drops in 2019 due to the boat incident that killed Chinese tourists. Since then, the tourism sector suffers the consequences. For Indonesia, despite being in the midst of the global headwinds, global economic state, Indonesia economic growth experienced fixed investment growth continuously, and then it's spurred by the glaring drop in commodity prices along with political volatility. For Singapore, in 2019's economic grew sluggish, resulting the GDP decline on that year. For the manufacturing sector, it was hustling. The export-oriented economy has been struggling from the trade war between China and United States following the cyclical global decline in the electronic sector. Lastly, in 2019, Cambodia GDP decreased due to continued strength in traditional industries such as garments, tourism, trade, and construction. The economy of Cambodia continues to grow. The total value of goods and services produced by the Philippines dropped by a larger percentage from 2017 until 2019. Moving on to the domestic economy of Malaysia, Malaysia's GDP recorded decrease in its GDP from 2017 until 2019, whereas for the rest of the rates of inflation rate, interest rate, and also unemployment rate, all recorded increase in 2018 but then dropped in 2019. In 2019, Malaysia recorded as the worst economic performance since the financial crisis in 2009. It was due to the imposed tax, Goods and Services Tax (GST) back in 2015, transmuted into Sales and Services Tax (SST) in 2019. For Malaysian inflation rate, the Malaysian inflation rate was high in 2017 because of the price rises for food and non-alcoholic drinks. Restaurants and hotels were among the key categories that affected the higher core rate. Furthermore, the other factor is the transport costs climbed to higher fuel prices. Malaysia interest rate increased in 2018 due to the BNM raised its key rate in January 2018 by 25 basis points to normalize monetary policy. Lastly, for the unemployment rate recorded low in its percentage in 2019. Lastly, for the unemployment rate of Malaysia, recorded the lowest in its unemployment rate in 2019, it was due to Pakatan Harapan campaigned hard on youth-friendly policies with strong promises to tackle youth unemployment. Moving on to changes in Malaysia industry 2020. For consumer industry, we can see that it helps to form digital services market, reshape business model to online base. For GDP, it helps the companies to increasingly rely on digital technologies. Malaysia also attracted foreign direct investment FDI through the competitive investment incentives and tax policies by focusing on technology and digital economy. And in the first 6 months of 2019 alone, Malaysia attracted RM 45.9 billion in FDI, up to 97.2% year on.
GHL System Berhad established in the 1994 based in Kuala Lumpur. The company is an investment holding company mainly involved as the top payment solution provider or leading payment solution, installing top-notch payment structure, technologies and facility especially for financial institution, telecommunication, e-commerce and etc. GHL System Berhad is a company who provides an advanced e-payment for e-commerce and the biggest payment solution provider in ASEAN. GHL System Berhad service is one top merchant acquirer with world-class payment service in Malaysia, Thailand, Philippines, Indonesia, Cambodia, Singapore, and Australia. Their service including solution physical, internet, and telephone payment. GHL also accept using credit card, debit card payment, prepaid payment, electronic wallet, mobile top-ups, and free collection services. GHL SYS or GHL SYS 0021 was listed in the East Market on April 2003 and the main market under technology sector in Bursa Malaysia in 2007. The shareholders is Ethic Star Maturities Limited with 38.58%, Parantaka Limited 12.72%, Apis Grove 14 Limited with 10.4%. Due to pandemic COVID-19, GHL System Berhad service give positive impact to many people. This because more people using online transaction such as e-wallet and online payment. GHL System Berhad aim to catalyze in offering loan, micro insurance, micro wealth management. This is for help micro SMEs and SMEs small and medium enterprise. GHL System Berhad having collaboration with United Nations Capital Development UNDF. This is for help SME businesses better system flow under I3 program sponsored by MedLife. GHL System Berhad assists the SME businesses, offline business with physical shop to step into online platform as well as e-commerce within 3 days only. Other recent development, GHL also teamed up with Asia Digital's aspiracy to provide micro-lending services and also GHL to offer lending services in Malaysia and Thailand. One of GHL's strengths is multiple revenue options within one value flow. GHL payment ecosystem across Southeast Asia can meet for expanding business which provide the company to receive multiple payments from many platforms. Next strength is building a captive subscriber base of merchant of point of sale terminals. The weakness of GHL System Berhad is low switching cost between e-payment provider. It will increase the chance of merchant switches from the GHL to the competitor since the switching would not cost a fortune. GHL is the provider as well as catalyst for payment solution and payment services. Many of the growth companies through transaction payment acquisition. JHL System Berhad also partnered, providing the e-payment system to many of notable companies in Malaysia, namely GrabPay, Boost, GoShop, Touch 'n Go, and many more.
The liquidity of GHL ratio is better as the company is able to pay back its short-term obligation. According to the graph, GHL has 2.06 current asset to every 1 ringgit liabilities. Minus the inventory, the quick ratio is 1.71, which is better than its competitor Revenue Group Berhad. This means the investment in current asset by GHL is good. The activity of the company for the year 2019 is not efficient enough as the inventory turnover is at 3.09, which is lower than Revenue Group. It means that GHL may be maintaining too much inventory in 2019. Account receivable turnover of the company is at 6.36, higher than Revenue Group, indicating a good credit and collection policy by GHL. Furthermore, the average collection period by the company is significantly better than Revenue Group, with only 57 days taken to collect credit and have the customer to pay on time. Even though GHL is good at collecting credit, they are bad at managing the efficiency of their asset and not able to maximize the sales from their total asset. Debt of the company is considerably low as the debt ratio of GHL is 2.96%, means that 2.96% is financed by debt and another 97% is financed by equity. The debt-equity ratio is at 0.04 times, indicating that GHL has lower risk of financial compared to Revenue Berhad. However, even though the debt ratio is low, the TAI of GHL can only cover RM14.65 per every 1 ringgit interest expense. Means that GHL may still be able to meet its fixed interest payment but not as much as Revenue Group. GHL is low for gross margin at 43% in 2019. Also, the net profit margin is at 7.77% as GHL is operating with extremely high operating expense. The company is only able to control the resource for the operation as the ROA is at 4.07%, but fail terribly at operating profit margin as they are not able to control all the costs gone for the operation. The ROE for the company indicate the trouble of financial decision of the company in managing operating costs to profitability ratio. Overall, the profitability in 2019 is in red zone for the company as they fail to reduce the cost of operation. The earning per share of the company remained from previous financial year. The price earning ratio of GHL is at 37.08, means that the stock is overvalued and has better prospect and higher return for the stockholder. However, too high price earning could mean that the stock is too expensive compared to the industry average. In 2019, Boost company do not issue any dividend. Book value of GHL stock in 2019 is 60% and its price to book value is 2.25. Means that the stock selling more than the book value. The company intrinsic value is at 3 ringgit 96 cents. However, market price of GHL stock is 1 ringgit 80 cents, which means it is sold lower than its intrinsic value and making it underpriced. When the price is lower than the intrinsic value, it is recommended to buy GHL stock. Then, when the market price exceeded the intrinsic value, the investors are recommended to sell the stock for profits. Based on the risk analysis, it is shown that relationship between the stock and index is significant correlation with 1% market return. The regression of the graph indicate that every time that KLCI is at 0%, GHL is valued at 0.096%. As KLCI increase by 1%, GHL will decrease by negative 0.3107%. R2 of the graph show that GHL return is depending 1% based on KLCI performance. As conclusion, KLCI index return relationship with GHL return is negligible correlation. Overall, GHL fundamental performance in 2019 is alright. The company struggled with high costs and inefficient asset management which affect the profitability of the company. However, the company is able to fund their own operation by relying less on debt, meaning that they have lower financial risk exposure. GHL also priced a little higher than its present value, but worth less than its intrinsic value. Comparing both companies in Q3 2020, the liquidity of JHL ratio is better as the company is able to pay back its short-term obligation in 2020. According to the graph, JHL has 2.37 current asset to every 1 ringgit liability. Minus the inventory, the quick ratio is 2.09, which is better than its competitor Revenue Group Berhad. This means the investment in current asset by JHL is better. The activity of the company in the year 2020 is not efficient enough as the inventory turnover is at 3.00, which is lower than Revenue Group. It means the JHL may be maintaining too much inventory in Q3 2020. Account receivable turnover of the company is at 1.15, higher than Revenue Group, indicating a good credit and collection policy by JHL. Furthermore, the average collection period by the company is significantly better than Revenue Group Berhad, with only 7 days taken to collect credit and have their customer to pay on time. Even though JHL is good at collecting credits, they are bad at managing the efficiency of the asset and not able to maximize the sale from their total asset. Debt of the company is considerably low as the debt ratio of JHL is 2.25%, means that 2.25% is financed by debt and another 97.78% is financed by equity. The debt-equity ratio is at 0.03, indicating that JHL has lower risk to financial. However, even though the debt ratio is low, the time interest earned of JHL can only cover RM7.20 per every 1 ringgit interest expense, means that JHL may still be able to meet its fixed interest payment, but not as much as Revenue Group. For profitability ratio, JHL gross profit margin is at 43%. However, the net profit margin is at 0.45% as JHL is operating with extremely high operating expense. The company is not able to control the resource for the operation as the ROA is at 0.17% and fell terribly at operating profit margin compared to Revenue Group Berhad as they are not able to control all the costs gone for the operation. The ROE of the company indicate the trouble of financial decision of the company in managing operating cost to profitability ratio. Overall, the profitability in 2020 is in red zone for the company as they fail reduce the cost of operation. The EPS of the company dropped from previous financial year. The PE ratio of JHL is at 126.35, means that the stock is overpriced and PE is too high. The stock is too expensive compared to industry average. In 2020, this company did not issue any dividend. Book value of JHL stock is 64 cents and its price to book value is 2.25, means that the stock is selling more than its book value. Overall, JHL fundamental performance in 2020 is quite good. The company struggled with high cost and inefficient asset management which is affect the profitability of the company. However, the company is able to fund their own operation by relying less on debt, meaning that they have lower financial risk exposure. JHL also priced a little higher than its present value but worth less than its intrinsic value.
Firstly, as you can see in the screen, we have a JHL stock price performance in 1st of January of 2020 until 31st December of 2020. As you can see here, we have a huge and long term of uptrend, right? Okay, so notably here, right, we have a huge downfall which was contributed due to the MCO. You know, when the MCO, when the World Health Organization announced that COVID-19 is a pandemic that causes a lot of panic selling and the market price globally drops. JHL stock performance rebound higher than ever and creating the new high here in December. And overall, for the year 2020, the stock performance outperformed the KLCI index by a lot, and it has been performing above the index. The price is slowly skyrocketed to a highest price at RM2.17 on the opening of December 2020. The closing price was recorded at RM190. Next, we have a revenue. In the beginning of the year, the stock price was performing alongside the index for 2 months before going down and slowly recovering the price for over 6 months and gradually falling again in the October and slowly up again and sideways in the end. And the stock price is performing below the index. We'll take a look at the indicator of the 3 months for the year end of 2020, both for GHL and revenue. Firstly, on the left side, we have GHL for the SMA. As you can see here, we have an uptrend and then another downtrend. And the SMA line actually touches the price over here, so it's indicating a buy. Next, that we have a double SMA. Double SMA will give a signal once both lines crosses each other. In this case, on the last day of 2020, the line did not cross yet. However, from the gap, you can tell that the line will be crossing soon, so it's better if you just hold it. Next, for revenue, the SMA touches the price. There were few sell and buy signal as the price went down until November before going up again and then remain sideways for the rest of the month of December. Therefore, the best choice is to just hold. Next, double SMA. There's a cross here near December, and the gap between the two lines is considerably far. But as you can see, the price is sideways, so the best choice is not to buy or sell the stock. Next, we have MACD for GHL. As you can see here, we have a divergence where the price is increasing, but the MACD histogram is decreasing. When a divergence happens here, the next thing will happen is a trend reversal, which was proven here as the trend transform into a bearish and pull the price down here. As you can see here, as the price went down, the histogram also went down, which means this is a convergence. When a convergence happens, it means that it will continue the trend. The MACD signal here almost touches each other. So there is a possibility that the trend will be bearish as the convergence confirms the future trend. Next, we have the RSI, where again we have a convergence and divergence here. Even though the price flicked up a bit, but it is far from knowing if the price is gonna go up or down. So the best choice is to just remain hold and not to buy or not to sell. For the revenue, as you can see, the prices remain sideways for the rest of December. The MACD was telling that we should buy here on November, and then we should sell here near December, right? You have to remember that MACD is a lagging indicator. So supposedly this signal was supposed to be here, but it was lagged, and the indicator is falling slowly and gradually towards the zero line. Is because it's losing its price momentum as the price movement became sideways. The best course of action is actually to just hold. Next is RSI. Well, you can tell that for RSI, it's pretty obvious that, as you can see here, there's a buy signal and causing the price to go up and within the normal zone again. And then as the price went sideways, the RSI began to lose its direction a bit because sideways is not for RSI. Therefore, I think the best choice is to hold. Next is RSI is actually pretty simple because, if the line when passes by the midline here, it will signal you buy or sell. And as you can see on the almost last day here, the price changes little bit above the line and it signals buy. So based on the indicator, you should buy. Next, we have the stochastic. If you can tell that there's something around here going on, when you see here, the price is not too significant in changes, but it looks so rigid here. This is because Stochastic is very sensitive, especially for trend changes, because stochastic is actually better to be used for sideways. However, if you see at the end of the day, we have the K% to be entering a little bit on the overbought zone here and following up with D%. This means that there's a potential that it will grow. However, it's not clear how soon enough that these two will cross again. So the best choice is to hold. For revenue, the ROC is pretty straightforward. You can tell the price went through up and down. Here is just sideways. The indicator is lingering in the middle because there's barely any price changes. So the best choice is to hold. As you can see here, there's a huge spike, and then the indicator went down very drastically here. This is a false signal because you remember the line down here is actually oversold, which means signaling that you should buy the stock. This is why stochastic is not suitable for a strong trend. We'll show you a false signal like this. I think it's the best choice to just hold the stock. As you can see here, we have the last signal, forecast, and decision. For GHL, we have the last signal buy, forecasting uptrend, so the decision is buy. WSMA buy, uptrend, and hold. MACD sell, downtrend sell. RSI sell, sideways sell. ROC buy, uptrend buy. Stochastic buy, uptrend hold. The final decision for GHL is there's 2 hold and 2 buy and 2 sells, which means just hold it, all right? And then revenue, we have, well, pretty much sideways and hold for the rest of the indicators. This is why GHL is slightly better than revenue.
So, the conclusion is GHL might have a pretty bad net profit margin and EPS over the past years. However, though, the company's stock is valued slightly higher than its present value, but the future value of the company is better than expected. The company is a huge company compared to the competitor revenue group, Berhad. With an increasing demand for digital payment services nowadays, GHL attracted a lot of attentions and built more sturdy customer base. Considering how GHL is helping SME out in midst of pandemic, this could mean that GHL have a lot to offer to SME as they requires GHL services. Normalization of e-payment could really elevate GHL sales and opportunity for the company to grow its size. Investing in the company in short term may not be too significant in price changes, but it is recommended with long term. Every investment poses risk. Happy investing. Thank you.